All right, it's 10:01, so we'll go ahead and get started. So the topic for the webinar today is how can construction businesses master their revenue projections? And as we get started here, if you have any questions throughout the process, feel free to drop it in the Q&A. We'll hold all the questions at the end, but I promise we will get to them at the very end. So what we're going to cover today is how to streamline the revenue projection process, how to increase the accuracy, looking at your up-to-date backlog and prospective projects, the different methods you can use to update the projections, and then also how you can kind of look at different what-if scenarios based on which projects you may or may not win when looking at your revenue projection. So super excited to cover all this today here with you. And joining me today is Bruce. So Bruce, I'll let you give a quick introduction.
Hey, Kevin. Yes, I'm excited to join this webinar with you. My name is Bruce Orr. I am the CEO of ProNovos, and I basically wanted to be part of this and talk about our latest feature. I think this is going to be a much needed addition to not only our technology stack, but also to the industry as well. You know, Kevin, I was thinking about this topic, and I think we did not do ourselves a great deal of service by using the term revenue projections. In my opinion, I think a more accurate term might be financial projections. And I say that because not only will we focus on revenue, but we'll also cover pipeline, backlog, and future costs. And I'm sure you're going to agree with me when I say this, but it's typically a tedious process because the data for most construction financial professionals and PMs, we know it's not readily available, right? Best case scenario, they use financial reports and it's after the fact. You know, it's difficult, if not impossible, to make timely decisions when looking in a rear view. So, you know, I wanted to just say, hey, I think this is more around financial projections that is inclusive of revenue. Would you agree?
Yeah, I think that's really well said, especially the idea of, you know, a lot of the analysis that construction companies do tends to be that rear view mirror analysis, right? Like, hey, what was my profit last quarter? How much revenue did I do last month? And it really takes a different kind of approach to it to have more of that forecasting type view. So I think you're totally right. It's all about financial planning, not in terms of, hey, how much money are we going to make in 2023, but is my organization structured and set up the correct way to make sure I'm going to meet my financial objectives for the year. So yeah, we're going to be focusing on revenue because that's where it all begins, right? In construction, you know, people aren't going to have a role to play unless, you know, the revenue is coming in the door and there's projects that you're signing to contracts and doing. But I think it's a really good point you make, that it's just kind of one piece of the much larger picture of that financial planning aspect.
Yeah, and I didn't mean to jump straight into it. It was on my mind. we were on introductions, Kevin. You know, I don't know if you want to say anything about yourself, but I'll leave that up to you.
No, I like getting right into it. I guess real quick, I'm the product manager with ProNovos. Prior to my life at ProNovos, I was in project management for construction. So I know kind of firsthand a lot of the obstacles that a lot of the contractors out there are facing today when it comes to this financial planning and all the tasks that go with it.
Yeah. And, you know, Kevin, one of your big responsibilities is really ensuring that the product that we're building is serving the industry. So I see now we're looking at the main three components of what ProNovos offers. You know, it's financial workflows, which we'll show you one of them today. Construction analytics, that's what we're most known for. And then project management. Project management, you know, is something that we put a spin on because we are a data-first company. And if you want to learn more about any of these three areas, please reach out to us. We'd love to tell you more about it. But this is all about one of the financial workflow components.
Yeah, and specifically elaborating on that financial workflow component, I think a lot of people, when we tell them, hey, we focus on financial workflows, there's kind of that question, what does that mean? Are you guys an accounting system? And we view it kind of differently. I really view it as the cross-section of the accounting activities within a construction company and kind of that more operations project management aspect. And it is much more future looking, right? So that's what we're really going to look at today is one of those aspects. How do you forecast your revenue as a contractor, not only at the company level, but also at the individual project level?
Yeah.
All right, should we just get right into the tool?
Yeah. So real quick, Kevin, we can assume that everyone that's on this webinar, they are doing some type of revenue forecast, but I just don't want to make that assumption, the saying about assumptions. So tell me, Kevin, why in the heck do contractors even need to do some sort of financial projection?
Yeah, and I'm actually kind of curious what everyone on the webinar, how they do it. So I just launched a poll if everyone could take a second to fill it out. But I would argue revenue projections are incredibly important in construction, more so than some other industries, right? Like I think we would all love to say, hey, we're going to do 2 million in revenue every month. You can book it, it's guaranteed, that's great. But that's not really how construction works. It's a very cyclical industry by nature. You're going to have your ups, your downs, and it can be really difficult to make sure you're meeting not only your financial goals, but like I said, you're organized in a way to make sure you can do the amount of work that you need to. Let's say, hey, the prior year you did 15 million in revenue, but in the next year you're going to do 25 million in revenue. Well, that's not going to happen automatically. You need to make sure, one, you've got the bonding capacity to do it. Two, that you have the right resources in place, the right management team, the right field employees, the right superintendents, the right equipment. So if you really need to be kind of forward looking to make sure if you are going to meet your revenue goals, what are those goals? Make sure you understand what you're striving for, and then you can kind of work backwards from that to make sure are all the necessary pieces in place that we need to achieve those objectives.
Yeah, no, I love that. As a matter of fact, I was reading an article a few months ago that talked about like contractors and their mindsets as it relates to the practice behind managing an active pipeline and backlog. And one of the things it said, I think they interviewed probably 300 contractors, and they said they often are running across this mindset, ignorance is bliss. So they said, if we just keep doing what we're doing, we'll be okay. And then another one was like, hey, I'm worried about running current projects, not tracking backlog. And I get it. It's not something, again, I said it earlier, the data typically is not readily available. So our goal and our mission here is to make it as simple as just opening a web page and you get all of the information that you need to make decisions on future jobs, the jobs you're contracted. And as you said, when you need to go to the bonding company, the data is right here ready for you.
Yeah, I think that's really well said. And I think it's something a lot of contractors would relate to, right? It's not necessarily they don't know what to do. I think most people on this webinar have a sense of, hey, how do I need to forecast my revenue? It's kind of having the right tools and the right data to do that in an accurate and efficient manner.
Yeah.
All right. So yeah, let's get into how would you actually go ahead and do your revenue forecasting within ProNovos. So what I have pulled up here is our revenue forecasting tool. And the first thing you'll see is you can select the year. So this is really good, right? You can plan out not only what your revenue is going to be through the rest of 2023, but if you want to start looking at 2024, 2025, however far out you might want to start looking at revenue, you can kind of select the year and look at it on an annual basis. And on the left here, what you're going to see are a few different KPIs. So the top one's going to be, hey, what's my total projected revenue? And when we consider what our projected revenue is, there's usually those two main buckets. What do I currently have in my backlog? What are the jobs I have under contract, right? I know I'm going to earn that revenue at some point. It's just a question of when will I earn that revenue? And then the second bucket, and I think this is probably the trickier one for contractors to navigate, is the prospective jobs. What are the jobs I'm chasing? You're going to face the same obstacles as the backlog jobs, right? When are those projects going to go? When am I going to earn the revenue? The prospective jobs have an extra layer of complexity in terms of which ones am I actually going to win? So when we look at our total projected revenue, what we're doing here is we're combining what revenue do I think I'm going to do for my backlog, in addition to what revenue do I think I'm going to pick up in additional prospective jobs.
Kevin, let me just ask you, just to clarify any terminology. Sometimes people refer to backlog as contracts that haven't started, but you've been awarded. Here, what we're saying is your backlog are any jobs that are active, right? And we are including jobs that you're contracted, that you're currently executing, right?
That's correct. Yeah. So if I have a $5 million job and I'm 20% into it, I have 1 million in revenue to date, and then my remaining backlog is 4 million. So that's what we're looking at here. It's jobs that you have a physical contract for, a legal obligation to perform. What's that contract amount and what's remaining on that contract that you'll get paid for at some point.
So it doesn't matter if you started the job, but you have been awarded I think you said you have an obligation to perform the work. Doesn't matter if you started or not, right?
Yep, exactly.
Okay, yeah. Cool. And prospective jobs, that's really saying this is your pipeline. So it's more around business development.
Exactly. Yeah. And this is where you get a little bit into the art versus the science. I think I've seen some contractors be very diligent about it. Hey, the only jobs we're going to include in the perspective are ones that we've actually physically sent bids out for, that we think we have a high probability of winning. Other contractors I see, they say, okay, we're kind of in the early days. We've been asked to bid on this project. We don't know if we're going to get it yet, but we still like to include it in our prospective jobs. So that's really where you get more of the art of the revenue projections, is what gets included in that prospective job list.
Got it.
And we'll get into that in a little more detail. Yeah.
Right.
The other thing I always like to point out here is you also have the ability to set a target. I think it's one of those truisms in life that, you don't achieve anything unless you set a goal, an objective. So kind of knowing what your target, what your goal is for the year is a really good way to kind of track, okay, between our backlog, between our prospective jobs, do we have enough in the pipeline to meet our target? And then what you'll see here on the right is a visual that kind of shows how the backlog and prospective jobs are tracking against that target. So I've got my backlog in blue, my prospective in a light green, and I can kind of see how that stacks up against my target here. So right now, based on what I'm currently tracking, I'm going to meet my target revenue in September. So it looks like it's going to be a very good year for me, based on kind of what I'm showing right now if I get these prospective jobs.
So on the right-hand side, as you're moving, I see the list of jobs. And as you said, the blue bar, that's showing what we have actually, what's the blue bar again? Yeah,
so the blue bar is going to be the backlog. And then, or it's going to be your backlog projects. And then the kind of the lighter green bar is going to be your prospective jobs. So as I hover over the months here, what you're going to see on the right is it's going to update. So that gray bar, that reflects the actual backlog amount on the contract, right? So as I kind of go from July to August, I can see that backlog switch over into revenue that I'm projecting to earn. So it's going to give you a sense of what are the most critical projects for you to meet your revenue target in a given year. And I think this is something that is really good as a contractor to understand, is chances are, right, you're going to be doing dozens, if not hundreds of projects over the course of a year. Understanding from a strategic level, hey, which of these projects are most important to us hitting our revenue goals, especially the prospective ones, which ones do we really want to go after hard, which ones are important for us to win, to make sure we hit our targets. It's a really good way to kind of make sure that you're focusing your attention on the projects that are most critical to your strategic objectives.
Love it. Real quick, the target you talked about in this example, it's 14 million, but there's also an art and a science in coming up with a target. We have several clients that what they want to do is focus on what gross profit margin they like to maintain. And it is, hey, after our overhead and everything, this is the margin that we want. But right now, whatever target a company wants to set, you're not, whatever dollar value, you can just enter that. There's no limitations around that, is there?
Yep. So yeah, you could just click in here. And if I wanted to enter a new target, I could change that to 20, 25 million, whatever I need to. And to your point, a lot of contractors kind of back into that saying, hey, what's our target profit for the year? Or another way we see it done a lot is understanding what your overhead is, right? And then kind of saying, okay, if our overhead is X and our gross profit on average is 5%, 8%, what's the total revenue that we need to do at minimum to make sure we cover our overhead? So there's a lot of different ways you can come up with that target. Some people say, hey, I want to do a 20% growth year over year compared to what I did in the prior year. It really depends on in terms of how you want to approach your financial planning in terms of how you want to come up with that target number there.
Right. No, I love this in terms of the old adage, pictures are worth 1,000 words. This is a beautiful example of that. You see exactly where you are, where you're headed, what your target is, and what jobs are contributing to that.
Yeah. So as we move down this year, now we're going to get actually into the meat of the report, right? So it's always great to have this summary level view, especially from a top level financial planning aspect, but we don't want to know the actual jobs that are making up this revenue. So as I go down here, what you're going to see is it's broken up into three sections: your backlog, your prospective jobs, and then we have a third bucket for miscellaneous revenue, which we'll kind of put aside for today. But if I start by looking at my backlog, these are going to be all of my jobs that currently have a remaining backlog left on the contract. And this is where at ProNovos, we try and make it as easy on you as possible. You're not having to upload this. You're not having to enter the data. This is going to pull directly from your ERP system. So once you've set that contract amount in the ERP system, set up the job, it's going to flow directly into ProNovos and show here. And then it's going to tell me my contract amount, what prior revenue I've earned. And then this top row here, this is going to be my projection on a month-by-month basis. And then underneath it, if it's any prior months, it's going to show me what my actual revenue in that month is. So it's a really good way to kind of see that projection versus actual to say, okay, was this just a pipe dream when we said we were going to do X amount of revenue this month? Are we actually kind of on track in terms of what we've expected? And then it's going to highlight the current month for you. You can kind of make any modifications here for the future months. So if I wanted to update this 200,000 to 500,000, I can make that edit here. And then it's going to show me what my 2023 total is, and then what my remaining backlog is going to be at the end of 2023. So it's going to take that contract amount minus the prior revenue, subtract all the revenue I'm doing in 2023, and I know how much is going to be remaining at the end of 2023 that I can then project out into 2024 or subsequent years.
Did I hear you right that this will pull automatically from the ERP? You mean I don't have to dump the data in Excel and then upload it? This is like that?
Yep. Yeah. So it's going to pull every night. It's going to pull contract amount. It's going to pull job cost. It's going to pull your budget. So you're not having to calculate even this prior revenue or what your actual revenue is. It's going to do all that math and calculation for you and data prep. So you're really focused on not necessarily aggregating the data, but purely on, okay, now that the data is in the right place, let me really think about it and focus on making sure my projections are accurate.
Nice. Nice.
So the other thing that you can kind of see here is, this is obviously a lot of information, especially if you have a lot of projects. So you can look at it at the company level here, but you also have the option to drill into a project. So I'm going to select this one right here. And what this is going to do is it's going to open at the project level. And what you're going to see is some KPIs around the project. So I can see what my revised contract amount is what percent complete I am, the earned revenue, the backlog, my job cost to date, my projected final cost, and then my cost to complete. And again, all this information is going to flow directly from the accounting system. So you're not having to manually update this information here. It's going to happen automatically. And what this allows you to do is you can have your project managers be a part of that revenue projection process, because right, they're going to know the financial details in a more intricate level than the CFO or the controller might. And when we think about how we recognize revenue in construction, it's not based on when do you build a project or when do you collect cash for the project. It's going to be based on that percent complete basis. And how we see most contractors calculate that percent complete is job cost divided by what you think your projected final cost is. So how this is set up here is it's going to allow the PM to actually forecast, hey, what do you think your costs are going to be in each individual month? And then based on what they think the costs in the project are going to be, it's going to calculate what does that mean from a revenue standpoint.
So life and projects are not always linear as we sometimes like to think they are. I noticed that we have different ways of doing the projections. Linear is probably the most common, right? But sometimes what we're trying to do is identify the perfect S curve. So will you talk a little bit about the different ways of showing the distribution?
Yeah, so if I look at this here, I have $323,000 in cost remaining to complete on the project. I can do it just like I was doing at the company level, where I can go in and modify each individual month. Chances are you're not going to be very accurate doing that, right? There's a lot of different variables going on a construction project. It's very hard to get a high level of accuracy if you take it kind of month by month. But what we see in construction a lot is there's kind of common curves that a project kind of follows. So the most basic one is just like a linear curve, right? If it's a $12 million job, and it goes for 12 months, I'm going to do $1 million each month. So what this is going to do is if I apply the linear curve, it's going to take that $323,000. It's going to say, all right, how many months do you have remaining on the project? It looks like I've got 1, 2, 3, 4, 5, 6, 7. So it's going to do 323,000 divided by 7. And it's going to apply that in each of the individual months. So very quickly, I can get to a place where, okay, I now have a starting place projection based on this here. So the linear.
Sorry, I was going to say, which this is not really going to be the way it happens on the project, right?
No, yeah, it's like, if anyone does a perfect linear curve, that's pretty darn impressive. And I think what we see most common in construction is more of an S curve, right? The project kind of slowly ramps up, it gets very busy, and then it kind of ramps back down at the end. So if I apply the S curve here, that's kind of what I'm going to see here, right? All right, I slowly ramp up, and then I ramp back down, and I can save that. And now I can kind of see, all right, I have an S curve projection on this project here.
This is so powerful because it takes a lot of the guesswork out for the PMs. We're actually giving them guardrails, if you will, in terms of how they might spend that cost remaining on the project. Now, I know that they can go in and they can update it at will, but for a project manager that has a lot on his plate, or a project manager that is somewhat new to the position, this is pretty nice tool to have, I think.
Yeah, and I think it's a really good kind of baseline, right? I always like to think of it, hey, you need the script that you're eventually going to deviate from. So even if you say, okay, this S curve's not perfect, you can then kind of go in and modify it kind of once you have a starting place. And I actually think the easiest way to modify it is not thinking it from a cost perspective, but really thinking about it from a percent complete perspective. So if I switch tabs here, I can kind of see, okay, that S curve, this is what it means, like it's going to play out month by month. But let's say, you know what, I don't think that's really right. I can just kind of click in here and say, hey, I think I'm going to be 50% done in July. I think it's going to be 65% in August. I think it's only going to be 90% in October. And you'll kind of see as I'm making these adjustments, it's updating that curve in real time. And then if I go back to the cost, it's actually going to update what that means from a projected cost standpoint as well. And then kind of once I'm done making these adjustments here, it's going to flow back to that company level view we were looking at. So now once the project manager is updating that percent complete on a month-to-month basis, well, that's automatically going to be reflected in your revenue projection. So it's
Wait
kind
a
of
minute,
taking.
hold on, wait a minute. I'm
Yeah.
sorry, time out. You're saying that when you make adjustments on the cost side or the percent complete side, well, the first thing you said when you came here, you said the revenue projections, typically it's based on your percent complete. So it makes sense. You make adjustments here, it's going to flow over into the revenue projections.
Yep. Yes, exactly. So if it says, hey, in July, I'm 50% done. Well, that's going to be 50% of my contract is going to be my revenue completed in July. Then in August, it's going to say, okay, if I'm 65% complete done, that's going to be my total revenue at the end of August. So now if I know what I did in July, and if I know what I did in August, I can kind of say, okay, the delta between that is the revenue that I actually did in August. So once you've updated either the cost or the percent complete here, it's going to flow right back in here, and you're going to see those updates accordingly at the product or at the company level.
I love it. Gosh, I got to say, Kevin, before we started building this, you did a fair amount of research, and tell me what you found in your research. And I know we only have a few minutes, but I'm kind of curious. How are other contractors typically doing this?
I would say what you see most common, a lot of contractors doing is it is a lot of guesswork that they're kind of just throwing, darts at a dartboard. It might be accurate, it's probably not, but they're like, hey, we know we need to do something, so we're just kind of thumb sucking, put it in up to the air and kind of taking the temperature and kind of seeing how accurate we can get. I think it's really good that contractors are at least going through that exercise, but like we kind of were talking about in the beginning, it really is important from a financial planning standpoint. And if you're just kind of throwing wild guesses at it, you're really putting yourself at a disadvantage by doing that in terms of making sure you're prepared as an organization to meet your goals.
100% agree. So I see you're in the prospective jobs area.
Yeah, so we talked a lot about the backlog. Now, the second half of that is the prospective job. So what you can do for the prospective jobs here is you can add a new job, give it a name, who the client is, the start date, the end date. I'll actually put one in here real quick. So I'll say it's going to start in July 1st, and it's going to run through December 31st. We'll say it's a $1 million contract, 5% margin. I can then select that default distribution again, linear or S-curve. I'll do an S-curve. And then I can say whether I want to include it in my projections or not. So if I don't include it, it's going to track it on the page, but it's not actually going to save it. Or I'm sorry, it's not going to actually include it in my totals. If I do include it, it will. And I'll add it here. And you can kind of see real quick. All right, starting in July, I've got that S-curve. It's going to tell me what I'm projected to do in 2023. And what my remaining backlog is. And then if I said, hey, I actually don't want to include it, I cannot include it here. It's going to kind of gray it out, and it's going to remove it from my totals up here for my prospective jobs.
I know there's way more we can go in on this, but I want to take a moment to see if anyone on the call is finding this valuable. And if so, would you like a demonstration of the product? We'd love to talk to you and see how you're currently doing it. And Kevin, is there a prompt that we can throw up?
Yeah, I will launch the poll right now.
Yeah, we'd love to hear from you. Again, you don't have to want a demo. If you just want to learn more about what we do, how we do it, talk about the way you're doing it, please reach out. This is I think a nice icing on the cake to a lot of the other features that we provide.
Yeah, and we're kind of coming right up on time here. I see we've got one question. We'll stay on for a few minutes if anybody has any follow-up questions. But the first question I see is where are the prospective jobs entered in the estimating section? So right now you would enter the prospective jobs currently right here within the revenue projection tool. If you're currently using ProNovos and you're using the estimating module within ProNovos, that is future plans that we have that will basically tie the estimating module to the prospective job section in the revenue projection tool. So you're not having to double enter the data in two places.
Great question.
Well, I guess I don't see any additional questions. Bruce,